The Checkpoint is presented by GM Pharma, the first international multinational pharmaceutical company in Georgia. GM Pharma, to serve those who need it most.
Let us start with the main key sensitivities to Georgia's rating at this stage of assessment that Fitch provided.
So as you know, we recently affirmed Georgia's rating at BB with a negative outlook, and the key negative rating sensitivities for Georgia, the topmost remains the pressures on external liquidity. So since we saw a drop in international reserves in October of last year, the reserves have been inching back up, but it still is a cause of concern, if you like, because they are still below their August 23 peak. So any further sustained decline in international reserve levels could be negative for the rating. Secondly, a substantial worsening of domestic political or geopolitical risks, which could potentially be seen through greater societal or political fragmentation, for instance, could also be negative for the rating. And finally, a weakening of the policy framework, perhaps due to some of the political factors that I mentioned, that could create risks for macroeconomic stability, though that is not evident at the moment, given that the economy is doing relatively well. That could also be a negative rating sensitivity for Georgia.
Yes, let's dig deeper into each of them, please. The first, the negative outlook reflects heightened political risk and possible external liquidity pressures. What do you mean more specifically under that? Please elaborate a little bit.
Yes. So let me talk about the external liquidity issue first. So currently, I have to emphasize that we don't foresee any immediate threat in terms of like liquidity sudden stop for Georgia. The reserve levels are relatively low, so they are below 3 months of imports, which is generally recommended by the IMF, and net international reserves are also below the levels recommended by the IMF. But what is key is that if there is a stoppage or a substantial reduction in FX inflows, currently that is not evident because like the services sectors are doing pretty well, exports are doing well, tourism sector is doing very well indeed, as you know, so there is adequate FX supply in the economy. If something were to happen to impede that, then you could see an increase in risks. And this will become particularly pertinent in case the authorities do not roll over a $500 million euro bond, which is set to mature in April of next year. In that event, they would have to find the reserves to pay off this bond. On the political front, so we are no longer seeing the kind of political violence or the very severe political tensions that we saw, say, in May and October of last year during the transparency law and the parliamentary elections, respectively. At the same time, the opposition, as you know, is continuing to boycott parliament, and relations with many Western partners, most notably the EU, remains quite strained. And that in itself is leading to political polarization within the country. So in that context, given some of the measures, the legislative measures that the government has been undertaking, the local elections in October of this year could be an important flashpoint for tensions that we will be watching.
Also, Fitch has a special focus on FDI inflows in Georgia in this current updates, and you have covered all updates on new laws that create risks to external donor flows or economic performance as per Fitch. Why is it an important focus?
Well, FDI tends to be quite important because Georgia runs structurally relatively large current account deficits. So how does Georgia actually finance those deficits? It's fundamentally either through FDI or through some other capital inflows or by running down reserves. Now, so which is why FDI becomes quite important. And FDI has historically been relatively stable in Georgia. But since the start of last year, we have seen a decline in FDI levels. And indeed, this week, the first quarter FDI data was released, and in the first quarter, FDI has declined by 8% in year-on-year terms, right? Which means that there is an increasing risk that current account deficits may not be adequately financed. Now, I have to point out that we don't have firm evidence that the ongoing political or geopolitical tensions are directly causing FDI levels to be negatively impacted. But I would say that it is a likely factor behind what is going on in terms of FDI, which is why FDI levels are very key to watch for the overall balance of payments and ultimately the reserves position in Georgia.
Yes, you also consider as a factor, and it was also highlighted in your last update, U.S. Congress currently considering legislation that, if passed, raises risk to U.S. sanctions on senior Georgian officials. Why is that important?
Well, it is important primarily from a sentiment perspective. Right. So if the Megobari Act does get passed in the Senate, then it could it would rather obligate the President of the United States to take some punitive steps against senior Georgian officials who have been alleged to have carried out human rights violations and so on. Now, in such a circumstance, if investor sentiment worsens, then one of the first indicators that you would see would likely be pressure on the lari. Right. And that so even though it's a free floating regime, we do expect that the central bank would look to shore up the lari in case the depreciatory pressures increase quite substantially, which would further worsen the reserves position. So that would be the key risk that I would say comes from the passage of the potential passage of this legislation.
Currently, Mr. Ramakrishnan, there are quite important reshufflements in GD's different governmental bodies, and one tendency that is evident is that GD tries to kind of like get rid of sanctioned officials, especially taking higher positions in the government. Do such decisions mitigate those risks that you have currently mentioned?
Well, it is difficult to say. So, for instance, as you are aware, the interior minister was recently replaced. So that could also perhaps be seen in this context. Mm-hmm. To some level, it probably does mitigate the risks associated with the worsening of ties with key Western counterparties. But on the whole, this is independent from what happens in our view with Megobari legislation. But more fundamentally, I have to hasten to point out that sector-wide, like entire sectors coming under sanctions, or like Georgia coming under like very large risk of secondary sanctions, is not our base case. By and large, at least in the financial sector, which is where like compliance tends to be very important, Georgia is complying with Western sanctions with regard to Russia.
Mm-hmm. Economic growth projections are also very interesting from Fitch. It's 5.6% in 2025, while we see higher projections, for example, in case of IMF recently raising this projection. Like, what is the logic behind how the Fitch rating sees the growth going forward for Georgia?
Yeah, you're right. So if we look at economic performance year to date, so in January to April, cumulatively, based on preliminary estimates, the economy has grown by 8.8%. And as you mentioned, the IMF is projecting over 7% growth for this year. I would say that there is an upside to the projection that we have, which is relatively conservative, of 5.6%. I would say that we have baked in some risk associated with the uncertainty over the political issues, some of which we have discussed, the potential for sanctions, again, what we have discussed. So there is certainly upside to our projections, I would say.
I don't know if you already know, but Levon Davitashvili said that ratings for Georgia should be much higher, and that they would work more closely with rating rating companies?
Our rating criteria is quite impartial and quite transparent. It's freely available, and it is applicable equally to all the countries that we cover. That is why it is very important that we have an objective set of criteria that we believe are accurately used to measure the sovereign credit risk of any given country. So in that sense, we have also applied that to Georgia. We have a rating model, and then we have qualitative adjustments, which we have made in Georgia's case on the structural factors as well as on the external finances factor to arrive at the credit rating, which we think represents accurately, especially in comparison to peers, what the credit rating of Georgia is. And the negative outlook for Georgia reflects, as we have spoken about earlier, the external liquidity pressures as well as some of the political issues and geopolitical risks that Georgia is going through at the moment. And in that sense, I mean, we are quite neutral in terms of which political party is in power, for instance. We consider things like World Bank governance indicators, which again provide a standardized metric of assessing some measures of political risk. And that is how we have arrived at our rating.
Fitch expects the authorities to roll over a $500 million Eurobond maturing in April 2026. You also mentioned this earlier in our conversation. What type of factor this is, and do you think it will become more expensive for Georgia?
Well, I mean, obviously, deciding to issue debt to roll over this bond, I mean, if the authorities choose to do that, then it would clearly be determined by market conditions as well. Yes. So depending on market appetite, the authorities would likely make a decision on when to issue debt and in what currencies they would issue debt. But our thinking at the moment is that the authorities would be able to roll it over, barring, say, an unexpected hike in interest rates or significant worsening of sentiment, perhaps due to an intensification of the trade war, which might make it difficult for Georgia to go to the international markets.
I remembered and I looked through like all the updates that Fitch has done on Georgia recently, and in February Fitch wrote the following: in Georgia, political tensions have had no material impact on consumer confidence or banks' profitability or the economic growth in general. Can we say that this tendency is being kept to this point as well?
I would say so, to the extent that we haven't seen evidence that economic performance has been negatively affected by political or geopolitical tensions, particularly political tensions in the country. So, as I mentioned, the monthly economic indicator shows very robust economic performance. As I mentioned, like January to April, nearly 9% economic growth, which coming on for the third year running is very strong, or even fourth year running is very strong economic performance. The tourism sector continues to do very well. Personal consumption metrics are also doing pretty well. So from that perspective, there is little evidence that there has been a real negative economic spillover from political tensions into macroeconomic performance.
Do you also look at fiscal parameters like tax revenues, and what tendencies do you see there? Because I haven't seen in your updates any focus especially on, for example, like tax revenue, collecting tax revenues. Do you see any tendencies there? Because this is the subject currently within the inner expert circles, economists, analysts. This is quite a discussion going on in Georgia currently.
Yes, I mean, the reason that it is not a top focus in our in what we have published is because this is an area where Georgia has tended to do relatively well. So in 2024 as well, even though it was an election year, so they overperformed their budget deficit targets, and we expect the general government deficit to average about 2.3% of GDP for 2025 and 2026, which is pretty much both within target and also sustainable for Georgia. And importantly, when it comes to public debt, debt is now below pre-pandemic levels, helped by a stable and strong currency. Because of course, I mean, Georgia's public debt profile is vulnerable to lari depreciation. And so we expect that from a fiscal management perspective, from a tax revenue collection perspective, and also from an expenditure execution perspective, Georgia has maintained relatively good discipline.
IMF's program for Georgia. This issue is regarded like for Georgia to have the program is regarded as one of the strong points to draw investments and to boost the investor confidence. Today, we don't know what is the exact position of the GD government towards this program, and we haven't yet seen the deep assessment of why the program has been stopped in Georgia. Article 4 consultations report might shed some light on these topics, and we are looking forward to that. But what is your take, Mr. Ramakrishnan? Do you think Georgia needs, do you think that could be an asset for Georgia to have a separate program with the IMF in current situation, looking at the risks that we have looked?
Well, firstly, we haven't seen public evidence that the Georgian authorities are seeking an IMF program. Mm-hmm. That said, given that the authorities will likely be going to the markets to refinance the upcoming Euro bond, it wouldn't be improbable if they did seek an IMF program, and not necessarily because Georgia needs it from a fiscal perspective for sure, but because such a program would likely be precautionary. But in our opinion, I mean, a program, an IMF standby or precautionary program, would indeed, as you mentioned, give some confidence to the markets, particularly when a country is coming to the markets for an issuance in foreign currency. So it wouldn't be inconceivable if there were negotiations between the Georgian authorities and the IMF for some kind of a program.
And looking forward, and looking forward into the future outlook, from this standpoint, do you see the ground for Georgia recovering its perspective to the positive again in the short term?
Well, I mean, here I think it would be helpful if I mention what the positive sensitivities, rating sensitivities for Georgia are. Mm-hmm. So number one is continued strong economic performance despite political uncertainty and geopolitical risks. And as we have discussed previously, to some extent, it could be argued that Georgia is actually demonstrating that in quite a robust way because the economy is doing very well. If we had the sustained confidence that the economy is resilient to the domestic political and geopolitical developments, then that could cause us, other factors being equal, to revise the outlook back to stable. Secondly, a stabilization of the international reserves position would also give us confidence because there was a significant drop, 13% month on month in October. And as I mentioned, even though it's been edging back up, it's still below its mid-2023 level. So we would like to see greater consistency in a buildup of reserves. And thirdly, a sustained reduction in domestic political risks would also be viewed positively in terms of mitigating risks to governance and independence of institutions. However, this, to be honest, doesn't appear particularly likely in the immediate term, and particularly as we have local elections approaching later this year. I would expect that tensions would remain relatively high.
And also, what are some of the are there any risks associated with for example, international trade at this point, given the U.S. stance on tariffs? Could that affect Georgia's economy? What is Fitch's assessment on that? And also like donor and financial assistance from the international financial institutions. Do you see this also as factors, and what type of factors are these?
Yeah. On your first question on trade tariffs and risks to Georgia, the direct risks to Georgia from potential U.S. tariffs are very minimal. Because Georgia's direct exposure to, in terms of the export share to the US is low, and most of the exports are things like ferroalloys, which are exempt anyway. So we don't see much in terms of a direct hit to Georgia from US either existing or potential US tariffs, and that is unlikely to change in our opinion. Of course, indirectly there could be impacts which may be hard to disaggregate, given that Georgia exports to EU countries, for example, which have much more direct trade exposure to the US. With regard to maintaining importance in the middle corridor route, for instance, we expect that at least for the immediate future, that is for the next 1 or possibly 2 years, notwithstanding a potential resolution of the war in Ukraine, Georgia's role in the middle corridor in terms of transshipments will remain significant, because trade routes have adapted since the start of the conflict in Ukraine, and we don't expect that those will be unwound quite quickly in the immediate future.
And also donor and financial assistance.
Again, we have not seen evidence currently that this is happening, that international donors are staying away from Georgia. We have heard anecdotally that there may be 1 or 2 multilateral lenders which have paused or are slowing down new sovereign lending to Georgia, but this cannot be confirmed. But more broadly, the relationship with the international lenders seems to be largely on track with regard to Georgia.
And also, what is your take on the talks about potential suspending of visa liberalization for Georgia, or taking away candidate country status from the country? Do you see these as like potential risks at this point, when you are weighing in? Do you weigh in these 2 risks as well?
Well, progress towards or a commitment towards EU accession would be something that we see as an anchor, because it generally helps to, if adhered to, raise governance levels over time, and also help build institutional quality through standards of the EU that need to be adhered to, technical assistance that is offered from the EU, and so on. So from that perspective, a suspension of negotiations with the EU, which we expect is going to continue for some time, is indeed negative, though the exact impact on institutional quality and governance indicators will be seen only over time for Georgia.
Thank you so much, Mr. Ramakrishnan. And to wrap up our conversation, what do you think Georgia could do at this stage to maintain this resilience of the economic growth that the economy has shown? Because we often talk about the Russian booster, so-called Russian booster, after the Russia-Ukraine war. Is its weight still big in Georgia's economic resilience?
I would refer back to the positive rating sensitivities that I mentioned, which could potentially result in the removal of the negative outlook on Georgia. I do think that since 2022, the large influx of migrants, even though many of them have left, as well as capital increase in productivity, is contributing to boosting potential growth in the economy over the medium to long term. And if we have the confidence that the economic growth will be sustained over a period of time, notwithstanding the domestic political issues and so on, then that could be positive for Georgia. Similarly, a renewed focus or maintaining in fact, increasing the reserve levels in a sustainable manner would also be positive, other factors equal, in terms of mitigating external liquidity pressures. And a reduction in domestic political risks would also result in lesser pressure on governance-related issues for Georgia.
So at this point, can we say that risks of the economy are mostly or entirely driven by political factors at this point, be it going closer to Russia or drifting away from the EU, whatever that is? Can we say that the weight of these political tensions, political polarization, is important at this point?
It is very important. I would say that it is one of the two main factors affecting the outlook or the trajectory of this rating. One is the political and the geopolitical factors that you have mentioned. And the second is the external liquidity situation, which I have mentioned.
Which also stems from the first factor.
Arguably, yes, as mentioned, yes, because, I mean, again, it is very difficult to find direct attributory evidence that reserves have fallen because, say, investors are not coming into Georgia or they're pulling their money out of Georgia, but it cannot be disentangled for sure.
The Checkpoint is presented by GM Pharma, the first international multinational pharmaceutical company in Georgia. GM Pharma, to serve those who need it most.